Right, hello there, and welcome to the trade of the day for the 8th of February. My name's Tom. I'm part of the trading support team here at Trendsignal. I'm coming at you with a recent trade that we took. We opened this yesterday. We closed it out today, actually, according to a slightly custom exit. I'll discuss that in just a second on the New Zealand dollar versus the Japanese yen. Before we get into the weeds of the session today, I want to draw attention to the fact that this is actually the market that we're looking at in the last video I presented for you guys. We're looking at this sell trade that lasted a day on this big red candle here. We were talking about how you can be a little bit more selective with the entries generated by a trading system, whether it's ours, whether it's somebody else's, just to make sure that you're not taking a whole bunch of guff trades and being chopped around by the market when there's not actually really too much supporting factors to get these across the line. To give you the high notes, essentially, we took this trade, we didn't actually take these three cluster trades here. Now, the reason being, and we'll run it very, very quickly just so you know exactly what's going on. If we select on, for example, we look at our stop loss, it's below 40 pips. We look at our stop loss, it's below 40 pips. We look at our stop loss, it's below 40 pips. We do not take trades that are below 40 pips. As I say, go on our YouTube channel, go back a week. You'll see me explain this in a bit more detail. Well, for example, this trade, stop loss of 43 pips. This trade, 81 pips. This trade, 65 pips. And the most recent one, we're looking at 57 pips. So we avoided these three choppy trades that didn't really lead us anywhere. We took the other four trades that ended up being quite good for us. And this one, the most recent one, is the one that we're going to focus on today. And the reason I wanted to come back to this market is not only to reinforce the decisions that we're making in choosing to be a bit more selective, even when you do get these ones that look quite good. You've got the weekly trend, the monthly trend, the charting pattern. So you've got a lot of supporting factors. We need to make sure that we're regulating how many trades we're putting onto the markets, because essentially you'd be looking at taking 1, 2, 3, 4, 5, 6, 7 trades. And half of them would have literally just gone nowhere. They'd have gone the opposite way a day or two after you've taken them because it's too shallow. I mean, essentially what you're doing by taking these trades is you're taking trades in the middle of a channel band. And for the last week, the market, not the last week, the last month, the last few weeks, the market has just kind of chopped around in the middle here and not really done much of anything. It's tried to break out previously. It's tried to break out today. And so far, it's failed to do so. So we ignore these low probability options and we go for the high probability options instead, which are going to take advantage of this compressed nature you see when you get trades trading with a channel like this. That's enough fluff. Let's go back to the actual reason we're here today. We're looking at this particular trade. This is a good trade for us. We're going with the trend. We're going with the weekly trend. We're going with the monthly trend. We don't have a supporting chart pattern. That's fine. We don't need it. It does help us. If we had the charting pattern here, we maybe would expect this to continue and maybe push past this area of recent resistance. But what we do, we run our TradeMate tool. Let me just run that for you again so you know how to do so. You go to your Trendsignal tools. This is at 10 o'clock UK time. We usually do this, the close of the American markets, essentially. You go to your TradeMate tool, you select the entry that you're looking to use, and it gives you a couple of different figures. You've got your account size, you've got your risk percentage. This is default for Trendsignal. £1,000 is usually what most people start with. And a 2% risk is what we think is reasonable, just to keep your account protected when trading these markets. And it will calculate this automatically. I mean, just to give you an example, if you're trading this at 10 times the account, if I refresh this, it's £3.5, so £3.50 per pip. If you're trading this on 1,000, it goes back down to 35p. So it's all proportional to account. That's what this fixed percentage risk means. On this particular trade, we're looking at a stop loss of 57 pips. We're looking at a starter target of 50 pips. And what you may notice is something that's actually quite frustrating when you're doing end of day trading. If you're not paying attention to it fully throughout the day, what happens is the market goes in the right direction. You get to within a hair's width. I mean, this is maybe like a pip or two or half a pip or something silly like that. And then it starts to turn back around, unfortunately. Now, why is it doing so? It's because it's coming up against the top of this recent band. You'll see actually that the stop losses and take profits the algorithm has selected are in line with this channel. This is basically where the price has been chopping in between for the last couple of weeks. So in this kind of situation, what is the best course for us to do? Is it to blindly follow this algorithm and hope that it's going to come back up another couple of pips and close out? Or is it better to take a winner when it's clearly obviously a winner and then wait to see if something happens a bit later down the line? What we choose to do is we choose to take a custom exit. We come out of the trade early, even though it hasn't hit the initial target that we were looking for. But of course, we want to make sure that our clients can do this as well. So whenever we choose to do so, we push out an email and we put it on the members area of the customer section of the members area website. This is what you're looking at right now. You can see here New Zealand versus the Japanese, the one sniper trade for the Feb 2024. We talk about how it's rejected current prices on a couple of different occasions. Essentially, we're just talking about the rejections on these support and resistances. We talk that we're just going to take this early, even though it's a few pips away from the starter target. We exited at 90.90. Now, all of our traders may not necessarily see this message at the exact same time, but the point is, let's say, for example, you logged in now, a couple of hours later. What you do is you just close this trade if you wanted to copy us exactly, and then you would wait for another opportunity. Some people may want to push this further. They may think this is going to come back up and retest and push through, especially because you have these extra supporting factors. But that's ultimately a decision up for the trader. And if you want to replicate Trendsignal's results, this is a finished trade for us. And it's quite a nice trade. We probably took something in the region of 48 or 49 pips at a quick glance. If you want to see how we identify these trades on a daily basis, we do 3 sessions a week. We do one on a Monday. That's going to be 12:30 lunchtime UK time. We also do a Tuesday 7 p.m. We also do a Friday 10:30. There'll be a link somewhere around this video to click into it. I'm sure they might put it on screen as well. So come along and join us. We'll show you not only how we identify these trades, how we risk manage, how we put them onto a brokerage account, but we'll also show you the advanced management techniques that we can teach you in time to maximize your results from these strategies. Hopefully we'll see you soon.